Welcome to the club. My name is John. I will be your host for this meeting of the Retirement and Investing Club. In this meeting, we're going to be talking about the withdrawal strategy. In our previous meetings, we talked about market fluctuations, which we're still experiencing as of Monday after Easter. We've talked about fixed income investments, which had you or the money that you have invested in fixed income will be earning interest at the end of the month. It is not subject to market fluctuations at this point, other than the change in the interest rates that it will be paying. So I thought that was very important, talking about fixed income. And we also talked about dollar cost averaging, how in a declining market, your regular contributions that you make actually get you more shares at a cheaper price than when they were higher previously to the slide that we've been having. With the market off 10%, you're basically getting quality shares of good companies that have a lot of weight within the stock market at a discount. And that was your dollar cost averaging, where we took a look at the Roth IRA, and we've seen that we picked up some capital gains that was reinvested, as well as we purchased additional $500 that got more shares at a discounted price. That investment is now down 10.73% since I initially invested in it, but it's okay. Everything's down right now. I'm done investing in that investment for the year. There's no more money allocated for it, but I still feel I made a good investment. And just as you are within your 401, 403b, or your IRAs, or however you choose to invest your money. But one of the things that I want to cover is the withdrawal strategy. And here's the reason why: you just never know what's going to happen. We're going to work, we're 3 months, 3.5 months in. You get your last paycheck on the end of the month or the end of the pay period. Now you're out of a job. Well, you've got options. Number one option is go out and get yourself another job. Depending on how old you are, that could be a challenge. I'm 63. I do computer support work. I'm basically a help desk agent. Not too many people like doing that kind of work. So I feel that I will be able to get a job, but how long will it take? And everybody's not me. The other thing is you would file for unemployment, but is your employer going to cooperate with getting the paperwork over to those people? That's a question mark there. And then the last thing is your bills are not going to stop coming in. So having a withdrawal strategy that's going to benefit you and not put you in a bad situation when it comes to your partner, the Internal Revenue Service, who's going to want their cut, is a very, very strategic strategy. Even though I am not a financial advisor, a wealth manager, nor am I a CPA, I do a lot of my own taxes. I do my own research. I do my own investing. And one of the biggest things that I research and I'm going to share with you is how I would deal with a forced termination where I no longer have a W 2 income, or I retire and I no longer have an income coming in. And what we're going to be doing is we're going to take a look and simulate as if we are going to be filing our income taxes. We're going to look ahead to next year's 2025 W 2s. We're going to look at our W 2s and we're going to look at the 1040. The simplest 1040 is a 1040 SR. I'm going to start with that because I am a senior citizen. A lot of it applies to the 1040 for folks who may have dependents as well as who could be married. The information I provided you is only for your research and investigation. You do want to consult with a tax professional on the subject material I'm about to present you. What we're going to be doing is we're going to look at the standard deductions, and what we're going to do is pull a certain amount of money to cover us from the pre-tax 401k or IRA. Preferably in my case, I'm going to use the IRA because I am over 59 and a half. I won't have a 10% penalty. However, I don't have a W 2 income except for a part time job that doesn't take out any federal income taxes. And I'm going to simulate as if I'm getting a small pension, which I actually turned on or was granted at 65. So I'm going to jump into it and we're going to start taking a look at the standard deductions. And then I'm going to go over the form with you. And we're going to do some of the taxes and just show you how you can withdraw a nice chunk of money, only take out close to the standard deduction where it'll zero out. And then any income you make after that, you pay a small tax on of maybe 10%. Okay. So I'm going to jump in and do a screen share and we're going to go through it. Thanks. All right, folks, we're going to go ahead and take a quick look at this one more time. So the standard deduction for next year is going to be 15,000 for a single filer and married persons filing separately. You're head of household and you get a big boost of 22,500, and a married couple $30,000. So if we hop right over here on the form, I'm using the 1040 SR, John Q. Public, 10 Cloverfield Lane, Damnedville, Georgia, 30311. I'm filing single. I have no digital assets, and I've got W-2 income from a part-time stadium job at 2125. I've got $115 in taxable interest. Any interest of $10 or more, you need to claim it. So from all my little accounts, I had $115, and the taxable withdrawal from my IRA distribution is 15,000, 2,700. And let me correct my math here because this is going to be right. Yeah, $19,400 is my total income. Now, this income, in many cases, for a lot of us on the low end, this represents the amount that we would get from the Social Security. So it's telling us to add these lines together. Add lines 12, 13. 12, 13. That comes to 15,000, and that should actually be a 4 there. Man, 40. So $4,940 is your taxable income. So you can see how the standard deduction will reduce it down to basically the money that I made in that IRA withdrawal, zeroes it out. I looked up the tax, and let's hop over there real quick, see if I can do it real quick. 400, yep, 493. Taxes are here, 493, 493. Down here, these are your payments that came out of your check and any child tax stuff. But for a single person, I had no taxes taken out anywhere, in zero. And way down here is subtract line 33. Line 33 is a zero from line 24, which is 493. I owe $493. So I'm basically paying the taxes on this right here. And you can actually track this with a simple calculator. You know you got a W-2 with no federal taxes. You know you told the folks don't take out any taxes out of my pension. You can almost do the math perfectly on your own. And this is what you would owe, $493. Now you're saying, well, I'm not accustomed on this tax scenario to beat the IRS. You're going to want to pay this little bit of money. You just withdraw your chunk of money out for the next year, In 2026, you get the same $15,000. You're gonna repeat this each year until you get ready to collect your Social Security. As long as you're not working, you're gonna take this amount of money out and only pay 493. As long as you don't owe the 10% penalty. If you do owe the 10% penalty, it's gonna be $1,500 that you're gonna pay. So it's gonna be 1,500 plus a 493. You're gonna wind up paying a couple grand, and you could just use the withdrawal from the next year to pay last year's taxes. This is all about survival and keeping yourself together, keeping all your stuff and not losing your home and all this kind of stuff. This is the withdrawal strategy that I'm going to use when I retire. I am not collecting Social Security right away. I don't need to. I've been working all these years. I got somewhere 260,000, was 300,000 till the market went down, of pre-tax money. That's where my money's coming from. And the pocket money, I'll get that somewhere else. So I wanted to make this real simple. You do want to talk to a CPA about this if you got more deductions, because you could take out more. I'm not qualified to go any further. This is just something I'm doing for myself, and I thought it would um, to share with you because it's an option for you, especially if you're married and you're 59 and a half and you're living. All you need is 25,000 to live. Oh man, you got it made, and you don't want to collect Social Security. This is something to look into. Okay, and I'm going to go ahead and end this meeting. This is John with the Retiring Club.